Hello everyone, and welcome to this week's Motor Trade Radio podcast. Powered by Motors, the driving force behind multi-site advertising. With Philip Nothard and Curtis Hutchinson, bringing you all the chatter that matters.
Well, the headlines keep coming, Phil. We've got a fairly packed show today, haven't we?
We have, yeah, and you know, we have got a snippet from a midweek supplier special as well as enabale moments as well with Stephen Whitton on top of quite a few headlines. It does never give up at the minute, but we'll do our best to bring you all the key headlines as we can. Won't we, Curtis, on a regular basis?
Yeah, no, we will indeed. And that supplier special that you mentioned, that was something that we recorded and posted earlier in the week. And it's a supplier special on Jigcar. And we spoke to Elliott Perks, who's the co-founder and CEO. Now, he's actually the ex-Kazoo logistics manager, and he talked us through how his startup, because it only launched in January, and it's using a AI-powered platform to really transform the way that vehicle movements are managed for franchise dealers and car supermarkets. And it was a fascinating insight to that side of the business, wasn't it?
Yeah, it was. And really, like you say there, it's trying to work, you know, logistics is a big part of any business in that retail space. But, you know, the bigger the geographic footprint you've got, the bigger the logistic challenges you have. And, you know, that's what his business is trying to make more efficient and using AI to do that. But we'll talk a little bit more about it later because, like I say, we've got a snippet from Elliott at the start of today's show, and then obviously the full interview will be in your podcast feed from earlier on in the week, and we'll put the link in the newsletter as usual on Monday morning for you to listen to the full interview if you haven't had a listen already. But also this week, as I said, we've got after the midway break, we've got our latest enabale moment. Obviously, with Stephen Whitton looking at the well-being in the workplace with our obviously mental wealth guru Stephen. So stay tuned to after today's break for the latest enabale moment.
And final shout out is really for Automotive Management Live. So if you haven't booked your place yet, that's you can do that online at AM Online. And the event itself is taking place on the 13th of November at the NEC in Birmingham. And I've just made a mental note to myself there, Phil, because I haven't booked my place yet. But,
no, that's normally where we get our selfie. That's normally where we get our annual face-to-face meet and selfie. So you do need to attend. I've signed up for it.
Yes, yeah, no, I will do it. As soon as we finish recording this, I'll sign up.
Yes, definitely.
You're listening to the Motor Trade Radio podcast, powered by Motors.
Headlines this week come from AM Car Dealer, Motor Trader and Automotive News Europe, starting with industry legend, Suzuki UK boss and friend of the pod, Dale Wyatt, announces his plan to take early retirement next year. We reveal the car brands with the highest proportion of EV ownership. And staying with OEMs, we'll look at how Spanish brand Cupra could run foul of EU tariffs and why Volvo is backtracking on its ambitious target to go fully electric by 2030. We've also got the latest full-year financials from the Trade Centre Group and Heritage Automotive, and we'll finish this week with an acquisition that's just been made by the John Clark Motor Group. But before we take a closer look at those big stories, we'll start this week's podcast with an extract from our latest supplier special featuring Jigcar, with Phil and I in conversation with co-founder and CEO Elliott Perks. Here's Elliott talking about some of the business's USPs and what's coming in the future from the business.
You're listening to all the chatter that matters on the Motor Trade Radio podcast. If you're a supplier and would like us to profile your business and reach our audience of dealer bosses, managers and decision makers on one of our dedicated supplier specials episodes, get in touch with Curtis and Philip at motortraderadio@yahoo.com.
Probably two questions as a follow-up there, Elliott, for you is, what is, how do you describe that gives you any sort of USPs to anything else that's currently in the market? And secondly to that, I mean, you do describe yourself quite clearly as not a transport provider or a transport marketplace. So how do you best describe what it is you do for the sector?
Of course. So yeah, I know I didn't mention the other two products, so I'll mention those as part of answering that question. But firstly, in terms of logistics management, what we see as logistics solutions in the market at the moment are essentially logistics marketplaces. They're companies that go to dealers and say, we will move cars for you through our marketplace of providers. But what we see in the market, and increasingly so, is one third party marketplace isn't going to be able to cover all the movements for a dealer group. It's most likely a dealer group is going to have a degree of some third party movements, some internal movements on casual drivers or any potentially employed drivers, maybe even on their own transporters, though less so, and then also across maybe marketplaces too. So what we do in our logistics management product is sit across the middle of all those different ways within which you can move a vehicle and start surfacing data to you in terms of like how effective and performant your logistics is across all those different resources, which no one else in the market does. So that's our USP in terms of our logistics management product. Our second product is our stock optimization product, which we'll be launching in Q4. And we think this is pretty novel and this is the one we're most excited about, because this is basically saying, right, now you've got logistics management in place. Now you can see all the vehicle movements you're making across your different resources. You can manage them, your drivers, your third parties. You can see how quickly you're moving vehicles. Now let's think about when is the optimal time to move a vehicle and where is the optimal place to move a vehicle to. And so that is basically taking data and saying this is where a car should be, or this is when a car should move, making suggestions and allowing a group to make movements and really think about its stock from a group level, with the ultimate goal that you can turn over more stock with the same amount of working capital. Then when we come to our third product, which is essentially a transport management software specifically for the automotive industry, this enables dealer groups that have internal logistics functions, so drivers, trucks, and also third parties that are planning vehicle movements on their own drivers and trucks, to manage and optimize the utilization of those drivers so that you don't have 4 drivers doing movements that one driver could actually do in a day, for example, with the ultimate goal of reducing costs and increasing the speed of vehicle movements.
I think that sums it up.
Yeah,
quite
definitely.
succinctly there.
Yeah, I mean, but I mean, it was a fascinating chat that we had with Elliott, and I think the thing that surprised me was that what he's doing hasn't actually been done before. Now, vehicle logistics are as old as the industry, and for him to actually, him and the rest of the team there at Jigcar, his fellow co-founders, for them to spot an opportunity, a niche that they could fill with this new tech. I mean, hats off to him. And they're doing a really great job, aren't they?
It is, yeah, and in the podcast, it does share some of those partners that he's already got in place across the sort of those AM 100 motor dealer groups. But as you say there, you do forget about that loss of revenue, that loss of efficiency when you're moving vehicles into company or collecting. And we know that there's a lot more vehicle collections taking place, be it from auctions, be it from consumers, etc. And it's about making it more efficient and maximising that, because you can imagine it, some of the size of Robert Forrester's business, moving those vehicles about. You need that support. So yeah, a great interview there. And I say, if you haven't listened to the full interview there with Elliott, then do check that out on the podcast feed from earlier on in the week, and it has been of high interest already.
So on with the headlines, Phil. The first story this week is from Car Dealer, and the headline there is Dale Wyatt to take early retirement from top role at Suzuki GB. So yeah, this is Dale Wyatt, friend of the pod, industry legend. Took to LinkedIn this week to announce that he's taking early retirement. So he's effectively given 6 months' notice. So he retires in March, and there'll be a phased-in transition with David Cately, who currently heads Suzuki's automobile sales operations, taking over from Dale when he steps down. So yeah, I mean, it's sad news because we're obviously losing Dale from the industry as one of the OEM bosses, but he has made it quite clear that he will be keeping in touch with the industry,
Yes.
and he will be doing consultancy work. So we will be hearing a lot more from Dale in the future.
No, and I personally wish him all the best, and I know he's a keen listener and a supporter of the podcast, and he gets involved with Stephen Whitton a lot in terms of that enabale mental wellbeing movement as well. And I always wish the best with Dale. He's in addition to being an industry legend, he's also a really nice guy on top of that. So I hope he does take retirement seriously and get some of that downtime and enjoy it. But you just know that, as he's putting here, he can't walk away. He's too passionate for the sector. He's too connected with the sector. So, he's never going to be able to walk away from the sector and entirely. So, look forward to that one. I'm sure before the 6 months up, we'll have him on the podcast anyway, and talking through that. And I suspect, Curtis, we'll see, but I'm sure he'll be a supporter of the podcast and probably want to come on every now and again, even in retirement, I suspect, going forward.
Yeah, there's a lovely quote from Dale within the story, because he says, I have no doubt that the automobile division is in safe hands with David. And, just a bit of context there. David Cately's been with the business and for 10 years. So he's been working alongside Dale for the last 10 years. And he goes on to say, I know I will wistfully watch the business go from strength to strength as it navigates the automotive landscape. So he will be keeping a very close eye on what's happening both at Suzuki and the industry as a whole. So it is great to know that he will still be out there.
I think they go to the same tailor as well, Curtis.
I think so, yeah. Judging from the
very smart, the pair of them there.
Yeah, they look very smart indeed.
Yes, exactly. And moving on to the next story, and it's in motortrader.com about MG has highest proportion of EV owners. And this, I know you'd have been involved with this one, Curtis, looking at some research from Judge Service on looking at the involving 5,700 consumers, and found EVs represent 41% of MG's ownership. 46% of the brand's customers have petrol models. So we've actually got the press release that you shared on this one, haven't we? And gives a little bit more detail than what's in the Motor Trader press release.
Yeah, you're right. So this is for the Judge Service State of the Nation survey, which is coming out later this month. And as you say, it's just under 6,000 consumers that have been researched. And as you mentioned there, so MG, it really is punching above its weight because 41% of its current ownership operates EVs, own EVs. And that's only marginally beaten by petrol at 46%. So you can see how well balanced that is. And they have the biggest proportion of EV owners of any brands. With looking at MG specifically, it did very much outperform all the other legacy brands in terms of that EV penetration, with Jaguar in second place, but that was at 24%. So still quite a long way adrift of that 41% that EV had. That MG had rather, and MG had a fairly even split between petrol and diesel ownership, which accounted for about a third of its ownership. And just looking at some of the other brands within the survey, Dacia was in third place with 17%, followed by Kia at 15% and Renault at 14%. So you can see that the percentages really start to drop off when you look at some of the other sort of more established brands. Even Nissan, and obviously an early adopter with the Leaf, it only mustered 10% EV ownership within its total customer base.
Yeah, like you say, I mean, it really does stand out with MG at that 41%, and even that top 10. The 10th place there is Skoda at 8%. So between the 10th position and number one position, between 8% and 41%, it's a significant gap, isn't it? Which shows kind of MG's dominance in that EV ownership. With those customers, so really leading the way in that marketplace significantly there, aren't they? But we quite interesting there that Seat is at 9%, which kind of segues us quite nicely into the next story. This one, Curtis.
Oh, I see what you did there, Phil. Very good, very good. Yeah, the next story comes from Automotive News Europe, and we can file this under you. You couldn't really make this up.
You like this one, don't you?
Yeah, I do. The headline there is VW's Cupra brand at risk from planned EU tariffs. CEO warns. So this story is it's all about the launch of the new Tavascan, which is a fully electric coupe SUV. But the issue that Cupra face is that it's not built in Europe, it's built in China. So it will be treated as a Chinese import when it comes into Europe once it's launched, and it's due to be launched over the coming months. So potentially it faces a 21.3% tariff. Now, it's not an inexpensive vehicle. I went onto the UK website, and it's listed at starting at £47,300, going up to over £62,000. Within Europe, it will retail from about €52,000. So at the tariffs, and it becomes prohibitive to actually sell in Europe, and because Cupra was expecting it to be quite a big seller for itself, which in turn brings down its CO2 emissions as a brand across Europe. So if it doesn't meet them with the new vehicle, again, it'll be penalised by the EU, which is very much why it's one of those stories that you can't make up. This is a perfect storm that's hitting Cupra.
Yeah, and there's quite a few comments in this from a representative of the brand, and it's quite interesting where they're saying that obviously Cupra decided several years ago to produce the Tavascan, its second all-electric model at VW's newly constructed plant in China as a one-off to get the product to market quickly, and had always planned for the model's successor to be built in Europe. They say that they are not a Chinese brand trying to swamp the European market. Their cars are not for the masses, and the car is not a subsidised product. They are a different animal. That is why we are trying to, that is what they are trying to explain. So they are fairly adamant that this is not right for them. But, I think it's how does the European Commission, set the tariffs and then, split it out for this. I mean, at the end of the day, if it's a Chinese manufactured product that is then being imported into Europe, then under the new tariff rules, it gets imposed with tariffs, doesn't it?
Yeah, and the fact that it's part of a joint venture with China's JAC automobile group, and that's where the factory comes into play. And it's as a brand, it's invested heavily in building this particular model, at this factory, and it can't change those plans now. It's too it's too close to production now, and well, within the story, the Cooper actually saying it puts the whole financial future of the company at risk. The intention was to protect the European car industry with tariffs, but for us, it's having the opposite effect. So it really is highlighting an issue facing, and it won't just be Cooper. That there will be other European brands producing cars in China, which will need to be imported back into the EU and will potentially face tariffs.
I think I mean, we did a story on it recently, as you know, around this the loopholes and the issues that these tariffs and those conversations are now what the UK government are going to do around the tariffs for Chinese imports. But within this story, it does go on to say that Beijing has threatened to retaliate with probes into EU imports of dairy, pork, and cognac. So it's getting a bit. What should we say? A bit volatile, isn't it?
It's getting messy out there. And then probably the final word on the story is that on the UK website for Cupra, it does actually use the tagline for this new car, the Tavascan, as inspiring the world from Barcelona. It doesn't actually say anything about it being built in China. So this will come as a genuine surprise to a lot of Cupra customers.
Yeah, definitely. So moving on to the next story, over to AM Online and remaining with the OEMs and some of the challenges at the minute. Volvo backtracks on electrification and carbon reduction goals. And I think this was part of their recent conference and strategic update plans. I think it was called the 9090. Apologies, I've got that wrong. And they've been all over social media because it's on the back of the launch of the new EX90 vehicle coming to market. But yeah, clearly they are now saying that they're not going to be fully electric and that they are taking a little bit longer to become a fully electrified manufacturer.
Yeah, again, an interesting one here because the piece does say the revised strategy now allows up to 10% of sales to include mild hybrids, with plug-in hybrids making up the remainder of the mix, with Volvo citing challenges in the broader automotive market's shift to electrification. So what does that mean? Volvo's not selling enough EVs to make it feasible. So it really has got to scale back on what was a pretty bold target of phasing out all ICE vehicles by 2030. Because we reported on the podcast, it must have been a year or so ago that Volvo was phasing out plug-in hybrids as part of that move to going fully electric. So it has looked at its current and forecast sales and worked out that it can't be done. It can't be done profitably. So it really is you're doing a major U-turn here.
Yeah, exactly. I mean, we know that they've reintroduced some models, haven't they, in the hybrid marketplace, the estate versions of some of their products as well in the meantime, which we've recently reported on. So, I suppose they in one way they're trying to be agile, they're trying to be reflective to the market. They're obviously trying to maintain their commercial value for them and their retailers in ensuring that, introducing products at the right time that's in demand and financially viable for them. But again, there just seems to be a lot of U-turns on a lot of the stuff that's taking place. And there's a final paragraph on the story, or one of the final paragraphs on the story, saying, in light of the changes, Volvo has revised its interim carbon reduction targets, and that the new goals include a reduction of CO2 emissions per car by 65% to 75% by 2030, based on 2018 levels, down from the previous 75% target, and achieving a 30% to 35% reduction by 2025 compared to their 40% goal previously. So some big changes for them, and they are sort of saying that despite these adjustments, they still maintain a long-term commitment to reaching net zero greenhouse gas emissions by 2040. So still have their long-term strategic plan, but again, it's how they get there is what's significantly changing.
So we're back with the rest of the week's headlines after the latest enabale moment from Stephen Whitton.
You're listening to all the chatter that matters on Motor Trade Radio, powered by Motors, the driving force behind multi-site advertising. This is your weekly one-stop shop for all the biggest car retailing headlines from across the media, available on demand, wherever you are, and on your podcast feed. Next up is our latest enabale moment, looking at mental wealth and well-being awareness and best practice in the automotive sector. With me, Stephen Whitton. Hi everyone, yes, it's enabale moments time again. Hope you're well, and I hope for those new car dealers out there that your September is proving to be everything that you wanted it to be. So I hope it's all going well for you. What are we going to talk about this week? Well, I'm going to broach the subject of suicide, because in the last week we had World Suicide Prevention Day, and the theme for this year is change the narrative. And we really do need to do that. We need to get the conversation going and enable and encourage our managers and leaders to be courageous and to broach the subject. And so what I'm going to do is to stitch in the audio from a video that I put onto LinkedIn earlier in the week. So in case you missed it, I'm going to stick that in at the end of here, and that will pretty much cover the subject that I'm talking about. And it's about putting the word joy in the same sentence as the word suicide. So before you stare in horror at the radio or your phone or whatever you're listening on, radio shows me age, doesn't it? Don't worry, I've got you on this one. And it's just a thought and a theory around how we can combine those two. So stick around and have a listen. The other subject I want to talk about is that I'm getting from some reliable sources words that there are an increasing number of grievances happening across our industry. And I'm not sure I really understand why, and this is coming from obviously people on the shop floor, quite often in the workshop area actually, that grievances are showing up and they seem to be increasing. Now, one of the theories that I have for this is something that I've touched on before, and that is that the younger generations that are now coming into our workforce, their expectations and their views and their culture and what they've been encouraged to do throughout school and education is very, very different to that of some of us older ones. And so we have to be very mindful of that and really kind of weave that into our businesses as well, and keep a check on our culture and our attitudes and the way that we behave. And that's not to stifle the fun, far from it. That's just to raise the point really, and let's be a lot more mindful of that. We're doing some work around that, so if that's anything that you need some help with, you know how to get hold of me and reach out and let's have a chat. Before I stitch in this video, or not obviously not the video, but the audio of this video around the subject of suicide, I want to just make one quick mention that comes with a massive amount of love and thanks and respect and admiration. And I am, of course, talking about Dale Wyatt, the director of Suzuki, who announced this week that he will be stepping down, taking early retirement in the new year, and will be admirably replaced by David Cately. I know them both very well, and they are great guys. And just wanted to say a massive thanks to Dale. He's one of my best buddies. I love him to bits, as I think if you know Dale and you've had the opportunity to work with him, or in my case, the privilege of being his friend, then you really genuinely are privileged to be a part of that human being's life. He's a fantastic guy. And let's take you over now to this little video. I keep saying video, it's like the audio file of the video that I put on earlier in the week that talks about suicide and joy in the same sentence. And I'll leave you with this. Take care. Speak to you soon. So can you talk about suicide and joy in the same sentence? 10th of September 2024, and the theme is change the narrative. Let's start getting this subject talked about. We need to get rid of the stigma, get rid of the silence. So what about that connection with the word joy then? Well, I'm not being glib, I'm not dismissing the subject, and I'm not treating it lightly, far from it. But for me, let's make it a joyous celebration when we are addressing this subject with people who have had suicidal thoughts or have considered suicide and have had those dark moments. The fact that they didn't do it is joyous. So how do we break the stigma? How do we get rid of the silence? How do we make sure that people are okay to talk about it? Well, I'm all about getting this talked about in corporate environments, and that means giving leaders and managers the courage to have the conversations, not to dismiss it, not to be so task focused that your people don't feel that you care, and to just have these conversations. Not to open up a can of worms for somebody who's not in that place, but to joyously have these conversations from the perspective of you being a caring leader, caring employer. And that's what I'm all about. That's what Enable's all about, is about giving people the courage to have those conversations. And when we do that, you spread a little joy, believe me.
So, as Steve says, that was an extract from a video that he posted during the week. So what we'll do is we'll put a link to that video on the newsletter that goes out Monday morning, so you can watch it in full, because it's very powerful and it is actually worth sitting down and just watching for a few minutes.
Yeah, definitely. Like I say, we'll put that in the newsletter on Monday. So if we turn into the headlines, and we've got three financial announcement stories to finish today with. The first one is with car dealer, and this is Trade Centre Group used car supermarket chain suffers fall in sales, turnover and profit, saying that the Trade Centre Group published its accounts for the full year 2023 trading. Sales fell by more than 7%. Turnover and pre-tax profit were down also, but the adjusted EBITDA went up. So again, a bit of a supermarket story here, relevant to stock availability and margins.
Yeah, definitely. And just to give a bit of detail on some of those figures, the turnover at Trade Centre Group dropped by 10% to 311 million. That was down from 345.5 million the year before. And that meant pre-tax profit dipped by 5% from 6.9 million last year to 6.5 million in these current accounts that go up to the end of last year. And as you say, adjusted EBITDA went up by 1.1% from 10.7 million to 10.8 million. And it does actually give a bit more detail about the number of units sold. So a total of 38,544 cars were sold in 2023 against 41,551 in the previous year. And that was a drop of 7.2%.
Yeah, they do obviously talk about the average monthly number of employees fell from 734 to 649, and by the year end, its financial year, the company had net assets of 18.82 million versus 2022's figure of 15.9 million. But they do go further in this story, don't they? As Andy Colhurst, who is the chairman, the board chairman for the group, saying that despite the UK's challenging economic climate marked by high inflation and low growth that squeezed consumer disposable incomes, we maintained profitability through strategic focus and careful management of costs. and saying that the directors added that our plans are to transform the business into the current trading year, as well as as are well underway, with more flexible working environment for their teams. But also they are looking at changing their profile, aren't they?
Yeah, they are, because they're talking about changing the retail stock profile to a newer age mix with better use of real-time data to inform purchasing decisions. So, but of course, everyone in the used car business is looking at that newer age mix to stock on forecourt. So there's obviously a lot of competition for that product. But it is interesting that they're looking at their overall stock profile, their stock mix, and reviewing it and seeing where they want to go in the future. But those newer age cars, as I say, that's what everyone's after. So it's going to be very competitive out there. But within the piece, it does actually say that in the report that there was an improvement in the availability of stock, and stabilization of wholesale prices helped the business. So there are some encouraging words within here.
Yeah. So wishing them all the best, and it'll be interesting to see those changes implemented, and obviously how the model changes, and obviously how that has an influence on their profitability for the year trading of 2024. But remaining with car dealer and another financials for the full year 2023, and this is from Heritage Automotive, suffers profit fall more than 50% as margins come under pressure. Turnover is up, but profit before tax and EBITDA are down. And directors highlighted Heritage team's commitment. So again, talking about the new and used car dealership group, Heritage Automotive, saw its pre-tax profit plummet by more than half last year on turnover that rose by over a fifth. And yeah, some numbers in this one again, Curtis.
Yeah, and just looking at those numbers, and this really does have echoes of some of the stories we covered last week, because we ended the show with a roundup of the latest dealer financials, and certainly for the full year, it was we were seeing turnover affected, profits down, and a lot of it down to margins. So within these particular figures for Heritage Automotive and Heritage Automotive, it's a big operation based in Salisbury. They operate across 19 sites across Dorset, Somerset, and Wiltshire, and representing the likes of Audi, Honda, Skoda, and VW. So within the figures, turnover grew by 22% from 179 million to 218 million, but profit before tax was down 52% from 4.1 million to 1.9 million, and EBITDA meanwhile fell to 5.2 million from 7 million, and that was a drop of 25%.
Yeah. So again, we've talked a few 2023 financials, haven't we now, over the last couple of podcasts that have been coming out. Some not so good as others, but one that we did talk about last week was John Clark Motor Group, who had a reasonably good performance, didn't they, in their financials, and this week they've been on the acquisition, and this is in AM Online that John Clark Motor Group, should I say, makes dealership acquisition, saying that it's completed the acquisition of a dealership from Gillanders Motors, which introduces the Kia brand to the AM100's group financial portfolio for the first time. So diversifying their brand now.
Yeah, definitely. And you're right. Last week we were talking about how the John Clark Motor Group had joined that £1 billion turnover club, on the back of what was a strong full year in 2023. So this is a good move for John Clark Motor Group. So yeah, they operate across 38 sites across North, East and Central Scotland, multi-franchise. But one of the brands that they didn't represent was Kia. So they now have a foothold with Kia. And within the story, it says a full redevelopment of the Kia showroom that they've bought is on the cards, so that will bring it up to the latest brand guidelines. And alongside the Kia dealership will be added a new John Clark Select business, which is offering a wide range of premium used cars. So that they obviously see the value not just in aligning with Kia, but also this particular site in Peterhead.
I think these kind of single franchise acquisitions kind of give you a little bit of insight of potential future shifts, doesn't it? Because we know through all the stories we talk about around the OEMs and acquisitions, this is all about this new partnerships and realigning partnerships, strategic partnerships. And you look at this and go, well, if they've got one Kia franchise, then there's more going to be on the horizon. If Kia's, if they've cited Kia or Kia cited them as a potential partner to represent the brand, then there's potentially going to be more coming rather than just the one site in a group the size of John Clark, isn't it?
Yeah, definitely. And this particular story, it finishes with a quote from Paul Philpott, who's the UK boss of Kia. And he says that John Clark Motor Group, their long-standing reputation aligns perfectly with Kia's values and commitments to customers, something which will benefit our ongoing partnership. So clearly, the long-term plan is not to stay at one site. There will be opportunities here for John Clark Motor Group to grow with the Kia brand, and this is very much a foothold.
Exactly. So quite a few headlines there. So thanks for sticking with us today. Hopefully we've kind of brought you up to date with a few of the acquisitions, a few of the U-turns from some of the OEMs, and the complexity of these tariffs in Europe. And is that an indication of what we may face in the UK? We don't know yet. And just finally, I know Dale will be listening, and both Curtis and I wish you all the best, Dale. And I'm sure we will have you on the podcast in due course before you think at all about putting your feet up or pruning those roses in the future.
Yeah, definitely. But that's all for now. So many thanks for joining us on the Motor Trade Radio podcast. Do check out our supplier special with Jigcar. Until next week, it's goodbye from me.
And it's goodbye from him.
Thank you for listening to the Motor Trade Radio podcast, powered by Motors, the driving force behind multi-site advertising. We'll be sharing all the URLs from this week's headlines on Monday morning. To make sure you receive them, just subscribe to the free newsletter on our LinkedIn page. Just search Motor Trade Radio Podcast.